In today's video, I'm going to be showing you the trades that I took to make 6R on gold this week. And of course, I'm going to show you the strategy that I used to do that as well. So let's get right into it. So we'll start with the strategy. Now, the first step for me personally is to simply identify whether the next daily candle is likely to print bullish or bearish. And I determine that mainly using internal to external range liquidity. So for instance, I'll go on the daily or the weekly and identify the trend. Maybe we have a bullish trend like this. Okay, now I know all price is going to do is bounce between internal range liquidity like bullish FVGs and external range liquidity, which is going to be old highs, right? It's only going to target one of those two things. So my job is to get on side with the run towards internal or external range liquidity. And the whole time we're moving towards one of those targets, I'm going to anticipate the daily candles to print in that direction. The same if I go on the higher time frame and identify a bearish trend. I know price is going to bounce between internal range liquidity like bearish FVGs and external range liquidity like old lows. And the whole time price is moving towards one of those targets, I'm going to expect the daily candles to print in that direction. Now, one rule that I do have as an intraday trader is that I want to be in line with the 4 hour or the 1 hour. So if I am bullish, I want to see the 4 hour or the 1 hour already be building order flow towards my target. Okay, that's a bare minimum. The same if I'm going towards a bearish target. The 4 hour or the 1 hour needs to be moving towards that target, because as an intraday trader or a day trader, the 1 hour and the 4 hour are very important time frames. So if I make sure that those time frames or one of them is in line, then I know that the intraday is already pushing towards a target, so I have a higher probability. So for instance, let's say that I'm looking for price to run to the upside to target this external range liquidity. Instead of just trying to buy down here, right, and catch the very low, I'll wait for the 1 hour or 4 hour to start building bullish order flow, and then I'll start to engage in the move, right, and catch these kinds of lows here. Let's say another example, price is bearish, but I'm trying to trade the retracement towards internal range liquidity. Instead of just trying to buy at this low, what I'm going to do is wait for the 1 hour or 4 hour to be bullish, right, and build bullish order flow, and then I'll get in on these kinds of lows, right? So just making sure I'm aligned with the intraday time frames. That's how I get my bias. And then the next step is navigating the intraday. So when it comes to the intraday, my main goal here is to be able to time the expansion. So once I have that daily bias, I want to know when price is actually going to move towards my target. And to do this, I use something called daily cycles. Essentially, they're frameworks made up of the kill zones that tell me when price is actually going to move and what session price is going to move in. So for these trades I'm going to be showing you today that I was able to make 6R on gold, I used 2 daily cycles. Okay, the first one is called Asia manipulation and the second one is called London protraction. So let me break these 2 daily cycles down for you. So the first one, Asia manipulation, what we're looking for is for price to form some kind of liquidity either previous day or just before Asia, and we're looking for Asia session to actually take that out. So maybe we have some kind of equal lows, maybe we have just an old low. We're just looking for Asia to take out some kind of liquidity and then push to the upside, forming a change in state of delivery. So after we take liquidity, I'm looking for a run to the upside and some kind of CSD, so maybe an order block formation to form. Okay, once we get that, okay, the point of this daily cycle is once Asia has manipulated, that's likely going to be the low of the day, right? We don't need to see London sweep out Asia's low because Asia has already taken liquidity. So what we're looking for after Asia is simply for London session to open up and give some kind of retracement, maybe into that bullish order block that was formed. And once we get that retracement, we can catch an entry in here. And from there, once we get that entry signal, there's a very high probability that London session is now going to expand towards the target. Okay, so by using this daily cycle, you're able to time the expansion in London session once you see price meet the criteria. This is a little bit ugly. Let me try and fix this quick. Kind of. All right, cool. So that's the first daily cycle. That's obviously a bullish example. If you want the bearish one, just flip it around. So now let's get into the second daily cycle that I used. So this one is called London Protraction, and instead of Asia kill zone manipulating liquidity like this one, we're actually looking for Asia to just build the liquidity. So no real manipulation and CSD, just choppy price action, right? Building up some kind of liquidity, whether we build up equal lows like I've just drawn here, or even if we just form an old low or low resistance liquidity. We're looking for Asia to basically consolidate. And then from there, we want London kill zone to do the manipulation, right? So you want London to open up and run lower beneath Asia's low. So the difference between these two is Asia does the manipulation, and in this one, London does the manipulation. Once we get that manipulation in London, we can look for the entry signal, which is the next part of the strategy I'm going to show you. And then from there, we know that there's a very high probability that London is now going to impulse towards a target. So yeah, this is what the daily cycle is about. It's just about being able to time that expansion very, very accurately. So the next part of the strategy is the entry. So I've deleted the impulse line so you know what it looks like when you actually want to get the entry. So down here is when you want to execute. So it's going to look like price is currently going against you, but that is when you want to get your entry before price explodes to the upside. Now, all you're going to do for this is look for a CSD. So in that leg, right, let's say for instance, this leg here, price on the lower time frame is going to look something like this. Okay, it's going to be forming and respecting bearish PD arrays to the downside. Like let's say for instance, a bearish order block. Okay, it's going to be forming and respecting bearish PD arrays. And what we're going to look for is a bullish switch. So ideally, some kind of CSD in the form of an order block formation. Right, so we're going to look for price to go from forming and respecting bearish PD arrays to now forming and respecting bullish ones. Okay, so let's say we form a bullish order block. That shows me the lower time frame has now switched, and that is the entry signal. So I would look for this when price is down here, and I would enter off of the order block or the CSD. To be fair, once we get that CSD, I'm very flexible with how I actually enter, right? So I could enter off an order block, off an FVG, off a breaker, off of a propulsion block, whatever it is, I can enter off it once we get that CSD. Now the same goes for the London protraction, right? So once price has swept out Asia's low, down here is where you want to get the entry. And this leg through the liquidity is going to look something like I drew a second ago. It's going to be forming and respecting bearish PD arrays. So let's say, for instance, in this one, it's forming and respecting like a bearish FVG. We're going to look for that to switch. We're going to look for price to go and form a new bullish PD array. So ideally, the first CSD, I usually look for a bullish order block formation. Okay, but it can be an inverted fair value gap if you like to play those. But I look for that CSD. Once I get that, I can enter off of any bullish PD array that forms to the upside towards a target. So like I said a minute ago, it can be a propulsion block, right? It could be a bullish FVG. It could be an inverted fair value gap. Okay, once we get that CSD, it doesn't really matter. You just want to start executing and, you know, ride the move to your target. And you will also find with experience that you're able to scale into your position. So there's certain points as prices build in this order flow that you can reduce your stop loss. So let's say you started with your stop loss here when you played this first bullish order block. As price moves to the upside, there's going to be opportunity for you to move your stop loss up to this low here. Now, once you've been able to reduce your SL here, potentially you've gone from having 1% on the table now to 0.5%. And instead of just sticking with that lower risk trade, if you're really confident in the move, you can go ahead and put that risk back on the next bullish PD array that forms. So let's say you got your first entry off of the order block, you reduce your SL here. Now, potentially you can go and enter again off of an FVG and put your stop loss at this reduced level. And now you're in two positions, right? And by doing this, you're going to be able to increase the profits of your trades. So that's the strategy I used this week, and it's the same strategy I use for every single trade I take every week, every month, all year round. Now, it can be broken down into 4 simple steps, and I've put those steps into a free PDF that you can access with the top link in the description. So now let me show you the trades I took this week. Okay, so let's get into the first trade. Now, the higher time frame bias for this was the weekly is bullish. Okay, we have just retraced into this internal range liquidity, and we know after targeting internal, price is just going to bounce back and draw towards some kind of external range liquidity. Okay, so we have the external range liquidity target I'm looking for price to draw towards. Then if we go onto the daily chart, right, you can see that price took out this old low, so that's sell side liquidity, into that weekly FVG, right? We took out multiple lows. Actually, we have this low here as well, and we have this low down here. We've taken a bunch of liquidity, and this was followed by a bullish CSD, right? We formed a bullish order block on the daily by closing above these last two down candles, right? You see how this candle closed above it? That formed a bullish CSD. So now price is building clear order flow towards that external range liquidity target, right? So we're looking to get in on that move. Now, at the start of the week, price was actually in a bit of a consolidation, right? If we look at this price action here, it's very choppy. Price is just moving sideways. So I didn't trade Monday. I said to myself, I'm going to wait for price to breach the low of that range before I try to buy. So I was looking for price to run below here. Let's just call it range low. And essentially, yeah, I'm not looking to trade in consolidation. So I was waiting for that to get breached. And if I play this out a little bit, you can see that Monday's price action ran out that range low. Okay, so from there, once we took out that range low, I was happy to engage. The following day was Tuesday. So that's the day that we was trading on. And like I said before, I want the 1 hour or the 4 hour at a minimum to be building bullish order flow. So you can see here, we're on the 1 hour. Down here, we have this last down candle that got closed above. When that got closed above, that formed a bullish order block or a CSD. And that shows that we're building bullish order flow towards the target. And now it's just a matter of identifying one of the daily cycles. So if I put on Asia kill zone, you can see that Asia looks to have formed equal lows down here. Okay, but if we go onto silver, which is the correlating asset, right, you can see that this low is the same low and price was able to take that out, which means that we have SMT on gold and silver, which essentially means that even though this looks like equal lows, it's actually a manipulation. So we've had Asia manipulate liquidity and form a bullish order block. Okay, so this is setting up to be that Asia manipulation daily cycle that I just showed you. So what we're looking for is not for London to open and take out Asia, but instead for London to respect Asia and run to the upside. So if I play this out a little bit, you'll be able to see the buy zone that I used. And that was actually this 1 hour bullish order block. Okay, so I was looking to buy within that bullish order block. Now I'm simply looking for London to respect that, give you my entry, and then I'll hold the trade. So now we're on the 5 minute, right? We're looking for that retracement at the start of London into the 1 hour order block. Okay, and you can see that's exactly what we got, right? Price retraced into this order block. If I go on to the 3 minute, you'll be able to see that we did actually take out this old low here into the order block. And even on the 5 minute, right, technically this here is an old low too. So we took out a little bit of liquidity into the buy zone. And if I put on London kill zone, right, you'll be able to see clearly this purple box is London. That formed a retracement into the order block. Now we're looking for that switch in order flow on the lower time frame for the entry. Okay, so you can see here, as price moved lower, it formed and respected bearish PD arrays. Okay, we have this bearish order block here that got respected to the downside. So essentially we're looking now for price to form bullish PD arrays instead. And if we look at these two down candles, okay, these two here, they got closed above. So that's formed a bullish order block. So by forming that, we're now clearly forming bullish PD arrays. That's the confirmation that I personally look for my entry. So my personal entry was off of here, and I'm pretty sure my stop loss was down at this low. And in terms of targets, if we go onto the 1 hour, okay, we have this level of buy side liquidity up here. Now you may be wondering, why am I not targeting further levels of liquidity? And the answer is that this was CPI week. Now when it comes to trading CPI week, price can very often stall at reaching the main targets, right? It may hold off on reaching main targets until after CPI. So I was just being conservative. So yeah, my target was this buy side liquidity up here. And if I play it out, you can see that price respected the order block and we flew to the target very, very quickly. So I'm going to put the execution screenshot so you can see that I took the trade. And I'll also let you know that I called this out to the free Discord. Okay, so the second link in the description is going to be for you to go and join the free Discord, and you'll see me predict moves just like this. So that was the first trade. Now the second trade was on the following day, right? It was on the Wednesday. Okay, so I don't really have to go over the higher time frame bias because as you can see, the higher time frame bias is exactly the same. Weekly FVG respected after taking this liquidity. The bullish order flows forming. We have external to target. So yeah, the bias is completely the same. All I'm looking for is another daily cycle. So if we go onto the 1 hour now, okay, and I put on Asia kill zone, right, you can see that Asia hasn't really manipulated any liquidity and formed a CSD. It's just added to all this choppy price action, right? We've just formed relative equal highs, which is nice liquidity to target, and we left behind this old low. Okay, and then if I put on London kill zone, okay, this candle is 7 o'clock, which is the open of London. You'll be able to see it on the 15-minute. So you can see here, Asia built liquidity, added to the equal highs, and then London kill zone has taken out Asia's low. So rather than the Asia manipulation cycle, this is that London protraction, where Asia gets taken, and then we expect London to run to the upside. Now, again, I'll talk about the targets because this was CPI day. So again, we're not going for those big external range liquidity or buy side liquidity targets that we have on the higher time frame. We're just going conservative with it. So my only target was these relative equal highs, and this high over here also happened to be previous day's high, right, which is a nice little addition. So as you can see, this is the liquidity down here, right? This is that Asia low that got taken out. As price moved below that Asia's low, we were forming and respecting bearish PD arrays like this, bearish order block here. You could even argue we have this bearish FVG here. We're forming and respecting bearish arrays to the downside. So I'm looking for that to switch. And that switch came about when this bullish candle closed above these last 3 down candles. And that formed a bullish order block. So we've gone from forming and respecting bearish PD arrays on the lower time frame now to forming bullish PD arrays. So that is the lower time frame confirmation I'm looking at to get my entry. And at the time, we also formed this bullish inverted fair value gap. Okay, so my first entry was off of the IFVG with my stop loss down here at the low. Okay, and if I play this out a little bit, you can see that got respected and then price ran to the upside, right? It started to react away very nicely. Now, remember I spoke about how you can scale into your positions, and that's exactly what I did with this trade. So once price respected the entry and started to push to the upside, I was able to reduce my risk, reduce my stop loss to here, which was roughly reducing it to about 0.5% risk or half an R risk. So once we had done that, I still had half an R to play with, right? If I want a full R in this position and I'm comfortable with the position, I want to be able to keep that risk on and add to my position. Okay, so what I was looking for now is another bullish PD array I can enter off of. If we go on to the 5-minute, okay, you can see as price reacted away, we formed a bullish propulsion block. This down candle here got closed above. That is a propulsion block. Okay, so like I said, I'm very flexible with my entries. I can enter off of any bullish PD array after the CSD. So then I put half a R risk onto this propulsion block here. My stop loss in the same place. I think my stop loss was here actually. And then once I got the entry, I reduced this one to here. So those are my positions. I was still on only 1 R risk, but I was now in 2 positions. And to this target, that's a 1 to... It was a 1 to 2 because my stop loss is down here, 1 to 2.4. And then obviously this position was a 1 to 2.4 as well. So, or wait, no, this one was a 1 to 2.1. This one was a 1 to 2.4. So those are my 2 positions. Essentially now, just holding the trade, see if it will run to the target. As you can see, we ran to the target very nicely. We had really nice clear one-sided bullish order flow all the way to the target. So yeah, this one was picture perfect. Again, I'm going to put my execution up on the screen so you can see I took the trade. You can see the 2 positions on there, so you can see I scaled in. And I'm also going to let you know I called this trade to the Discord as well. So again, if you want access to the Discord, I'm going to leave a link. It's going to be, I believe it will be the second link in the description. You can go and join completely for free, and you can see me call out moves just like this. So those are the trades I took on gold this week to profit 6R with just 2 of the 8 daily cycles that I personally use. Now, if you want to learn all 8 of the daily cycles, I've put together a 4-month process called the Daily Cycles Program where you'll learn all 8 of them over 4 months. Now, you actually have a 7-day free trial you can activate to this program, and that's going to be the 3rd link in the description. Now, not only will you learn all of the daily cycles, but it also comes with 7 in-depth trading courses as well as weekly training sessions hosted by me. So that was the video. I hope you found value in it, and I'll catch you on the next one.